So guys, here we are looking at the pair DXY, not the pair specifically, but DXY itself. Yesterday, I was like looking at DXY, and it's a bit of a complex situation, isn't it? It's a bit of a complex situation. Just by observation, you can see that there's so many things that can come out of this situation, isn't it? So the initial part, right, is that looking at this entire area here, we cannot neglect the fact that this is actually a consolidative state, isn't it? Is everyone okay? Sorry for not hosting the technical Sundays. I had a sketchy weekend, so I was still recovering from a lot of stuff that occurred. Like I was busy with some stuff. So now, based on observation, when we're looking at this situation right here, what we can see is that the market has been in a bit of a consolidative state, isn't it? So the fact that we are in a consolidative state does kind of like gives us at least a bit of an alert on what to expect, right? So with that as well, we can see that based on how we define a consolidative state, we say that it consists of a support and resistant, and then it consists of a control price which acts as both support and resistant, depending on where the price is located or the market is located at that time, right? And we have a clear understanding that if we were to bring this down to this level here, therefore the spikes to the upside, they will represent excess price. Are we okay with that? So now the question now arises, why should we consider taking short position? I think it's one of the questions that kind of like arise. Why should we consider taking short positions at this level here? Why should we consider taking short positions at that level, right? Can the short positions taken at this level be enough to push price to these levels here? Guys, I have asked a question which I expect an answer, by the way. So my question is very simple. My question is very simple. My question stems from this area here. Why shouldn't we consider taking short positions, or why should we take short positions at this level? Because like if we were to look at this area here, though when we look at this entire area, it's actually bigger or larger than this entire area here. But shouldn't we be in a position where we view these two as relatively the same, right? Because the market had every opportunity to make a rejection here and then push a bit further to the downside. So similar situation is what is arising around this level here. I think we should need a catalyst that pushes the market to the upside. So that is exactly what I've been thinking, that like, you know what, if we can get something that breaks above this area here, taps into this region, it gives us the necessary amount of liquidity required to push price as low as that level, isn't it? So that is one of the things that we have to factor in, especially when we're looking to take short positions at that level here. So all in all, I think we would need a catalyst to push the market further down to that level. Okay. Yes. So like that is something that we have to consider. So based on observation, right? This looks like an area that can provide possible shorting opportunities, right? I'm not neglecting that this is a probability that we can have a push to the downside, but now we have a bit of a problem when it comes to this level here. So remember that we have this there at the top, which is like a third retest, which everyone knows. So regardless of whether we test above, we retest this level here, which is the monthly supply zone, which also confluence with the weekly, daily, all those supply zones. So now when we go on a weekly time frame, now we have this situation here. Though we're seeing that the market is trending around this area here, if we were to go on a lower time frame, we can actually see that this level here has been tested multiple times. So itself, it does pose a bit of a problem, right? Okay, taking shots where possible. See, okay. I think that is one of the things that might be a probability, right? So at this level here, initially looking for short positions around this level here, which now viewing this, it will probably be more of like it being a bit of a problem and then having a reaction and then a solution. But now the push to the upside, though it might be a reaction, the question now arises, right? Now the question arises, if we are looking to take potential shorting opportunities, give or take around this area here, which itself has been tested multiple times based on observation. So now the question arises, then what do we do with this? What do we do with the gap? Are we going to neglect the fact that there is a gap there at the top? Are we going to neglect that, or are we going to, right? That's the question. Are we going to neglect the fact that there was a gap there that formed previously? Okay, let's say that maybe we choose to neglect the fact that there is a gap there. Now the question again arises, what occurred when there was a gap? This level here. Because the market had every opportunity to make a reversal around this area here, which it actually like did show a bit, but it had each and every opportunity to make a reversal around this level here, but it still continued to push to the downside to fill the gap. So now, what are the probabilities that the market would push a bit further to the upside in attempts to fill that gap there? And if we fill in that gap, wouldn't that fill of the gap confluence with the third retest? So if it confluences with the third retest, isn't that even closer to this area here, which can give at least rise to forced liquidation process? So I think that is one of the things that we have to consider. So though we might be looking for possible shorting opportunities, but we must not neglect the fact that we have something there that can be a bit of a problem, right? So I think that if we do get a bit of a rejection around this area here, it will probably be short-term rejection. So we must also take into account of that. So when we're looking to take potential shorting opportunities at this level, we will also factor in that it might actually continue to push a bit further to the upside. So we need to risk effectively. So are we okay with that? So even though we might get a bit of a retracement, let's say we do get a retracement from this area here, right? Let's say we do get a retracement from this area here, right? So the push to the downside, the main objective of us getting a retracement might be just to test the control price, right? Just the retest of the control price. And upon retesting the control price, and then we continue pushing a bit further to the upside, maybe a potential spike below the control price before the continuation of the run. So I think that is one of the things that we have to take into consideration. But like as for now, the decline in the value of dollar seems to be a bit low. Are we okay? Because now if you were to look previously on what was occurring before the dollar declined in value, you can actually see that before everything, there is a possible push to the upside, breaking above the previously formed swing highs. Similarly, we have seen it here. So now that means that if we do get a bit of a consolidative state around this area here, which will confluence with the fill of that gap and the retest of the trend lines there. So now this will give us a bit of a problem that can result in something like this or something like this occurring. Therefore, we can expect the DXY to actually create new yearly highs, right? Are we okay? Therefore, creating a reaction